Good evening, Eric Mashinsky here on July 20th. I decided to make a quick YouTube video to talk about the watershed activity in the gold market and the miners today. I do have some charts that I want to reference, but I still don't know how to do so while I'm talking on my YouTube channel. So I will attach those to the emails that go out tonight. And I'm actually very excited because, we all have our preconceived notions about the markets and about, what's going on with gold. Is it going to go higher, lower in the short term? What's it going to do long term? Many people have thrown in the towel on the asset. It's gone down for 4 years in a row. So it's absolutely been a tough market to endure if you've been a long investor. However, one of the areas that we've had really good success in, as any of you who've been a subscriber to the Gold Investment Letter back, through 2014, saw some of our very successful trades on the leveraged three times levered ETFs, both on the long and on the short side. This video update is going to be specific to Gold Investment Letter members, but I'm also going to send this to Elite Investment subscribers and Black Gold Letter subscribers, because at the end of the day, the trade that we have on the table right now is it's going to make us a lot of money, period. I think the risk reward on this, if we do it correctly, is terrific. I mean, this is a trade that we could be out of in a few days. It probably won't take us more than a week or two. And what we've seen in the past is buying at oversold levels or selling at overbought levels in the gold miners, which are a very volatile space as it is. As long as we enter that trade correctly and don't get greedy, we've seen anywhere from 20 to 50% net returns within, sometimes within hours. And usually it's within just a few days, because especially with the 3x ETFs, these things move very fast. And right now with NUGT, NUGT, which is the vehicle I'm choosing to play for this decline, we've right now got a relative strength reading of under 15, which anybody, for those of you that are traders or that follow relative strength as just a general metric for how oversold or overbought a particular stock or sector is, it's getting pretty extreme. And we've seen, the miners have just completely fallen out of bed over the course of the last few days. And we're also on today was the 5th day in a row in terms of a decline. I'll just read a little blurb from Reuters this afternoon. Sell-off in gold miners wipes $8 billion off their market value. That was just today, and it pushed the global index of gold stocks to a 6.5-year low. I think we actually broke the 2009 record, or the lows, and we're in new low territory. And that would take us back then, maybe it is 6.5 years. It's the biggest one-day percentage drop in 2 years today with gold. Spot gold fell as much as 4% to its lowest in more than 5 years, as concerns about a U.S. rate hike spurred selling. Look, as far as the rate situation and the long-term or even the intermediate-term prospects for gold, all I'll say about that is that it's actually, if you really understand what the correlation is with interest rates and gold in its history, the best indicator has been real interest rates or real yields, which is essentially interest rates less inflation. And gold will rise when real rates are negative, or if they're declining towards negative territory. That hasn't been the case the last few years. We're talking about real rates, not just the rates that you're seeing in your bank account. So I'll get into that more when it's appropriate. And in fact, I am working on our mid-year issue, and I've just been very busy. I apologize for the delay, and now is a great time for us to focus on that. But in the interim, this is a trade. This has nothing to do. We could be trading ice cream sandwiches right now in a 3x levered ice cream sandwich ETF, and this is going to make us money if you buy it and sell it correctly. It doesn't make any difference if you're a trader what it is. I'm not trying to sell you on where gold's going in 6 months or a month or in 5 years. This is a trade. We're in it for a very short period of time, and the risk reward right now is tremendous. So part of the premise of this, and the reason that I've been able to exploit situations like this in the market, it's just from experience, number one. But nothing goes straight down or straight up forever. That nothing does in the market. When you see these capitulatory moments of activity going on in a particular sector or stock or whatever it is, it's like a rubber band stretching. And the more that it stretches, the higher the bounce, or the more severe the correction typically ends up being. And so ideally, and I'm going to walk through exactly what you should potentially do if you're on board with this transaction. Hopefully some of you even got started today upon my alerts. I'm going to say exactly what you can do to make money. But before we do that, ideally what I would love to see is for gold and the miners to open down tomorrow morning. If that happens and they open down hard, it's like giving us a basket of free cash, because we're already very, very overstretched. Relative strength readings aren't the be-all of-all by any means, and certain things can stay overbought or oversold for long periods of time. But once you start to see 90 plus, I had a subscriber today who emailed me after my alert, and he's long DUST, D-U-S-T. DUST is the bullish 3X, which has been going straight up. It's actually absolutely parabolic right now, and the relative strength is over 90. So at this point, my advice to him, without getting into it on email because I just don't have time, is you're on the wrong side of this trade, and you might get lucky in the morning with that going up another 5 or 10%, 15% possibly, just because of how juiced up these ETFs are. But you better get out pretty soon. You can even short DUST in tomorrow morning session versus buying the NUGT or the JNUG, which are the long ETFs to go to be bullish on. But it's the wrong side of the trade, period. The money's been made there. Now the money's going to be on the bounce, and it has nothing, again, to do with fundamentals. So my biggest suggestion on something like this, and the reason that the trade that we're looking at and that we're already 2/3 long in, is be conservative with this aggressive strategy. And what I mean by that is that even if some of you aren't traders, you don't have to watch your screen for this. I can literally tell you how much. If you tell me I'm playing with 100 grand, I'll tell you exactly where to buy 50 worth, then 25, then 25. You can put the buy limits in. Maybe you get just half, maybe you get the whole thing. And then we would set at that time, once things have bottomed out, we set our sell limits in, and these things can hit while we're in the car, they can hit while we're in a meeting. It doesn't matter. I'm not a high maintenance trader where I'm day trading all day. I don't have time for it. I run a bunch of businesses. But this particular trade is worth your time. It's worth my time to really get on the YouTube tonight and to spell out exactly what is going on, because even though we're dealing with a 3X ETF, the risk on this trade is actually very low because of how stretched it is getting, and because of our strategy of scaling into the trade. So when I'm talking about being conservative on an aggressive strategy, here's what I do. Today, when I sent the alert out at $3.96 a share, I think I changed it by the end of the email to $4, was where the NUGT was. I bought about a half of a position that I wanted to take in this at that price, because we're already so oversold, and even hoping that it goes lower on me. It doesn't make a difference. By the end of the day, I'm 2/3 long, because actually, I'm sorry, I'm 3/4 in right now. We topped it off with another quarter position into the close in the 360 area, somewhere around there. And then I have dry powder for a potential flush to $3 or below tomorrow. And if the miners and gold are up in the morning, I would just sit tight. I wouldn't be, if they bounce, I would wait. We're waiting for the ultimate low to look at that last quarter of a piece. What might happen, and I've done this before, if it goes to 310 in the morning, I'll put that last quarter tranche in because it's getting very, very close. And then if somehow, some way we see like the most extreme readings in history and it goes to 280, I'll just find more cash and I'll put more in. But for the sake of keeping this in specific allotments, it won't matter because the profits will still be very, very healthy. But say we get into a position here, what I'm guesstimating is that, and if some of you didn't get the email in time today and you buy tomorrow morning, if it's down, you're going to be in an even better position. This has happened, I think, the last 2 times where I took the plunge, sent the alert out, and then anybody who had a delay of a half a day or a day ended up getting much better pricing than me. So hopefully that's the case for a bunch of you. But it doesn't matter to me at all because I'll make an unbelievable return anyways, and I want you all to make a boatload of money. But what I will do is, so I've got the half a position at 396 to $4 that I bought, and then another quarter position or under 360. Tomorrow I'll probably send out an alert, but you could literally just put in a bid at between 3 and 320. The goal is to get it somewhere around $3 if there's another continued flush. There is some technical stuff that could indicate it's going to dip below 3, which would be awesome because it's the oversold ratings at that point. As long as it happens now while this is continuous, would be extreme, very, very extreme. They already are. So this is already going to be a very good risk reward transaction. The other element though here is that we don't get greedy. We're not here for a bounce to triple our money. We don't, sometimes these 3x ETFs can do that. They're very, very volatile. They pop quite a bit, or they can decline quite a bit as well. But that's not what we're looking for. My target is on the bounce, the early part of the bounce, after scaling into the trade, is to sell at between, if you're really conservative, that's why I say be conservative on an aggressive strategy. If you're really conservative, get out at 20% and just move on. If you want to be a little more aggressive, you wait until you're closer to 50% if we think that's what we can get. But, excuse me, the analysis, the example that I just gave, let's say I average in at 3.5. It's probably going to be a little higher than that, but some of you probably could easily have done that if you bought later in the day after the alert, even with the first half chunk, and then got some at the close or tomorrow morning. $3.50 to $5 is a 42% gain for a trade. This thing was it was well over $5 yesterday. So the bounce, if we bottom out somewhere in the threes, low threes, $5 is going to be pretty conservative. I'll come out with my targets after we see it all work itself out. You've got to be a little bit nimble if you want to be picky about where you're getting in and out. But if you want to set your buys, you can do that. And then once we get all in and we see the bottom and the bounce is in motion, then you set your sells and you can walk away. But some of you that are a little more active, you can be a little bit more fluid because sometimes these things can move 20, 50 cents in a heartbeat, and they're very, very quick. So in any event, a 42%, if we get that this week, the annualized return on that is 2,180%. If it takes us 2 weeks to get out, it's 1,090%. I'm pretty positive, and I want to dig this up, but I just wanted to get this message out tonight. I'm pretty positive that our last trade, or the trade before that, when we did this on the bounce on the 3x ETF, we had over a 2,000% annualized return. And that just means that if you take the amount of money we make in a week or 2 weeks, and that if that was consistent, that's what you'd make over the course of a year. It just shows how powerful it is. When the problem is that these setups don't happen very often. They probably happen twice a year, maybe 4 times if we're lucky. But the fact that gold is in this bear market, we're going to get some of these extremes. So the lower that this thing goes, the more probable of a profitable trade that we're going to have. But I would say that as long as you do exactly what I tell you, and if you bought half today up to 4, no problem. I'm in the same boat. But if you bought later and you're a little bit cheaper, what this does is a couple of things just to talk about psychology and our own level of looking at this stuff. You know, there's no need for anxiety. We don't have to figure out where the exact bottom is when we're scaling into a transaction like this. I bought my position, and if it ended up bouncing from there, if it got, didn't go lower, and it was extreme enough, and then the market went to like, if Nugget went to $5 tomorrow, oh well, 20-25% return, half a position, I'll take it. I'm not sticking around. But I also hope that it gets cheaper and I can scale in more, and I don't have to worry about picking the exact bottom. I know I'm in the ballpark. I know I'm going to participate in the profitability of the setup. And if all goes really well, I'm going to be locked and loaded with a huge position. And I just don't care. It's not going to stretch that much further down. It's just, this doesn't happen. If we get relative strength below 10, there is, that's when I would go and, beg for money and just go ahead if I was completely out of cash and go all in on the poker table, because it's a certainty that things will bounce from there very, very soon. And usually the bounce is hard. And especially with the 3x leverage stuff, we're not looking for a 5% gain or 8% gain in a few months. We're talking about 20 to 50% within 2 weeks. That's our target. And that's not getting greedy, because if we got in at 3.5 and we sell at 5 with a 42% net gain, my guess is we got in at 3.5, it went to a low of say 290 or 310, and then it bounces to 5. On that bounce, it'll probably bounce to at least 6 to 8 by the time the bounce is done, if not even $10. And I don't care. We're in and out. We met our objectives. We took very low risk for the aggressiveness of the trade, and it met our objectives. This is probably the lowest risk, best reward trading setup that I can offer you as an analyst / newsletter editor. Take advantage of it. Everybody that I write to has different experiences. Either you've been out of the gold market, you're kind of looking at it. That's not the most common. Most people that are in this space are buried, and most people that have not been in this space now just find it disgusting and would never even touch it, which is good, because that's what makes bear market bottoms. But again, I don't think this is even the bottom. I think we may see that one flush to like 1,000 or below 1,000 on the gold side, and I think this fall would be a really good candidate for that. But it does not matter for this trade. We will get a bounce before that happens, and it will be a very profitable bounce. But whatever your deal is, I ask you, are you able to reset? Are you able to reset your brain for opportunities like this, or are you all twisted up in what happened yesterday? I got an email from somebody today about Banro, BAA, and it's somebody that I like a lot, and he's a smart guy. It's the second stock in a row where he didn't get stopped out. We specify stop losses in these trades so that the downside is limited. I can't do any more than that. You guys make your own decisions. But if he's stuck holding, Banro or midway into bankruptcy, there's nothing I can do about that. I have a lot of subscribers that do things completely opposite to what I say, because the emotion behind making decisions is terrible to do it right now, which is the best time to do it on the buy side. And then when it's time to sell, nobody wants to sell because it's elation and greed and all the stuff. It's contrary action. That's a good habit to get into. And when I say, can you reset? Are you sitting around and thinking about how your physical silver position is down X amount since you bought it in 2011? Or can you walk and chew gum at the same time and take advantage of a situation that's set up right now like this? You've got to learn, and I've got to learn how to be somewhat detached, not only from these markets, but also from the results and the outcomes, and to swing the bat again. Because as many of you know, there's long-term stocks that I've been buying and liking and fundamentally think are sound, and I'm buried in them. Some of the special situations that we've had over the last couple of years. But at the same time, we've had enormous winners on the trading side of things to make up for it. And by the time a bull market comes around, it's not even going to be funny how much money we make, for those of you that that stay along for the ride and don't look at one little thing here or one little thing there. At the end of the day, frankly, um, I know what I'm doing. This is a risky business. There's a lot of carnage when you're dealing with junior miners and volatility and all that stuff. But we're going to make money, and we're going to lose as well. But it depends on how we continue to improve our own state of mind, stay fresh, stay positive, but also realistic, and then really knowing when to strike, which is right now with this setup, buying NUGT. If you did today, fantastic, with a half a tranche. And what I mean by this, just to summarize, and I'm going to finish up. If you have 10 grand, say, that you're playing with, you should have bought $5,000 today in the last hour of trading. Then you take another 2,500, and you should have either bought it by the close or you buy it in the morning. And then you have another 2,500 that you're going to keep a little bit lower. And that could literally look like something like this. You bought half at 4, a quarter at 3.5, and then a quarter at 3. And see if you get filled in those different areas. The goal is that we want to massage our way and scale our way into the trade. It's not about being perfect. It's about being ballpark and maintaining some dry powder if it continues to go lower, but yet have the position on in case it decides to bounce violently from here, which is what it will do when it's ready. And then we'll worry about our targets later, but I'm thinking somewhere in the cost average of under 3.5, you're golden. And even a bounce to 4.5, which will be very easy for these levered ETFs. That's a really good gain to take. Even though we pay short-term tax gains on this stuff, I'll take it. If you can afford, if you're one of my elite investment subscribers and you can afford $1 million trade, do it. Do it with this exact strategy. This is an institutional strategy as well. If you're a family office and you can buy NUGT, which traded like 70 million shares today, and you can take a 1 million share position and have a $3 to $3.50 cost average on this, you're going to make over $1 million, maybe by the end of the week, but it'll be by the end of next week for sure, or else I'm just completely off my rocker. But this is a big trade, big money trade. I'm in heavy. This isn't a dick around trade. This isn't like a, well, let's put it in a little bit of money thing. This is like a go all in as this gets more stretched type of a transaction. The last thing I'll recap, if you want a mining stock, there's a lot of junior miners and there's a lot of even the producers that are just smoked and very, very cheap. But I'll just give a little bit of a last minute highlight on a deal that I'm very involved in, which is Patriot Gold, PGOL. It's a penny stock. But what I wanted to say about it is that you've got myself. We have a very, very, very successful, very wealthy businessman, Bob Koppel, that is also with me on the advisory board. We've got the capabilities to finance this company all the way. And Trevor Newton, who's the chairman of the board, who has a lot of experience in many different industries and formed this deal over 10 years ago. We're big in this company, and we're looking to make it work long term in a way that is not, taking it from 5 cents to 15 cents. It's more like, if we're successful, this will be a 50 cent to a $5 stock in 5 years or 3 years or whenever the gold bull market comes around. But we have a situation where Patriot Gold, with a puny $2.5 million market cap and a year's worth of cash in their coffers and $30 million worth of developments on their 2 projects. One is Bruner in Nevada, which is had been worked on by Canamex, a Canadian resource company. They've spent about $8 million on that in the last few years. Northern Vertex, another publicly traded company, which has got a north of $20 million market cap and has spent north of $20 million US on the Moss project in Arizona. They've already had a pilot phase 1 that has produced over 5,000 ounces of gold. This is, from a PEA standpoint, going to produce 45,000 ounces at a very low cash and all-in sustaining cost. Patriot flips to a 30% joint partner in each deal when certain benchmarks are made. Neither company has hit either of those yet, but they're both very close. Patriot is a great example of a deal that is trading for peanuts. And if you've got patience and you want to come along for the ride with myself and Bob Koppel and Trevor Newton, all of us who are in this for the long term and are sustainable, this is a great one to be chipping away at while it's under that 6 or 7 cent mark. I think you can still buy some at these prices, especially while this market is bad. But we've got some big plans for this deal, and I think that the two assets the company owns are tremendous. They're terrific assets. Brunner is probably the hottest discovery in Nevada in the last 10 years. The problem is that in this market, nobody cares, but they will, and they will one day. And I will say this as well. The bull market, the secular bull market in gold and silver is not over yet. The highs we saw in 2011 were not the top. I've talked about this for years, that we could expect up to a 50% pullback in the price of gold. I think the duration is catching me and more people by surprise than even the price action. Silver's been chopped into 2/3 or 1/3 of its previous highs. It's below that now. Gold is down considerably from the highs of 1900 and change. The gold miners are destroyed. They're down, in a lot of cases, 80 or 90% from their highs. But the activity and the action that we saw in the 2011 highs were not a secular bull market high in terms of how that works with activity and ownership. There still was a very thin level of ownership, which does not happen at the top of a bull market. It's like you look at the Chinese individuals recently that piled into their stock market, out into the middle of the ranches in the prairie land, opening brokerage accounts and buying all their stocks. And that's the type of stuff we see at the tops of secular bull markets. There's a lot of stuff that I've put out around this, and we might need another 6 to 12 months of resolve to get through the bottom. But there is a tremendous amount of evidence to me that shows that this is the biggest buying opportunity in our life. It's just a question of how you're going to play it, what kind of capital you're working with, can you be patient? I will tell you this, my plan, and I've been wrong before, is I'm 40 years old, and vis-a-vis gold and silver, I will retire a very wealthy man within the next 3 to 5 years, because I'm taking some enormous risks making bets that this bull market is not over, and I'm very excited about it. So a lot more to come. The last thing I'll say is this. I'm also going to be sharing, and feel free to email me if this is of interest, I'm going to be sharing shortly a way that I found where you, the investor, can get a guaranteed interest rate for 2 years of 5% on your money, and upside attached to the price of gold. If gold goes up, the return you would get, would be greater incrementally, and it wouldn't have a cap on it. But if the price of gold goes down over 2 years, you still get the 5% a year. There's no downside. I think the minimum is going to be $10,000 or $20,000 for accredited investors. But if that's of interest, you can email me, eric@phenom.ventures. That's my new email. That's my main email. This vehicle that's being set up is it's pretty interesting, and I'm going to share that with you all pretty soon. And it's what a great time for it. If you think at the back of your head that gold is going to go back up, but you're just scared in this environment, you don't want to risk too much, why not have somebody else take the risk, pay you an interest rate, give you some of the upside, but you don't have any of the downside? So I'll share that with you all very soon. Sorry this lasted 30 minutes, but this is a really good opportunity, this trade tomorrow and today. And I hope a lot of you participate, because I'm really feeling good about it. Thanks.